Hi to IPO subscribers. Welcome to eagleliveview.ai. Today, let us review the main board IPO from SYMBIOTEC, PHARMALAB. This is the financial performance and status of the company generated by AI-powered software. And based on the information given to the software, that is the financial statements of 31st March 2026 of restated financials. This company has been categorized as a defaulting company. Let us see what are the financial irregularities that made the company defaulting company. First, health analysis, solvency. Solvency, as you know, it ensures the sustainability of the company. Here, and whatever applicable metrics are there, they're all positive. So, no issue. So coming to liquidity ensures the survival of the company. Here the current ratio is 0.92. That means the company has diverted the working capital for some other purpose. That we will see later. And the next is quick ratio, it should be 1. It is 0.47. Here is also liquid problem in there. And that is one major reason. And coming to health analysis, all are negative except gross margin, all are negative. And coming to financial irregularities, yes, I told you, no, the current ratio is 0.92. It should be what? Current ratio, it should be 1.33. In that, one is loan amount, 0.33 is the gross working out margin money to be bring in by the company. So here, financial irregularities, funds diversion 42.02. So, and shortfall drawing for 42.02, absence of working capital margin 174.110 crore. Here, this 42.02 crores, the company has diverted the working capital loan from the bank and invested in long-term assets. So, that is the reason why the company has been categorized as a defaulting company. So, this is the diverting the money is against the banking norms. Diverting and investing, diverting the working capital is against the banking norms. And as per RBI guidelines, funds diversion is a fraud, and the practice is defaulting, and the company is a defaulting company. So that is the reason why this company has been categorized as a defaulting company. So next is profitability. Coming to EBITDA, 231.97, EBIT is 178.69, PBT is 153.36, PAT is 108.79, cash profit 162.07, EPS 19.1, EBITDA margin 26.58, so okay, good. Net profit margin 12.6, ROC is 11.56, ROE is 11.19. Book value per share is 183.26, very good. That's some good value. Cash flows from operating activities 174.59 crore. So cash flow from using in investing activities minus 226, and using in financing activities plus 35.99. Finally, the net cash flow for the year is minus 16.35. So market price 988 is the IPO cap price. So based on 988, price earning ratio is coming to 51.72. Aggressive value, abnormal value, in general, it should be less than 25. It is double the required ratio of price earning ratio, than 25. So it is abnormal and it cannot be, it's not justified. It's totally unjustified. Price to book value, it should be less than 3. It is 5.39. So coming to growth indicators, only one is positive. And whatever metrics are there, the rest of the metrics are, no, 2 are positive and 2 are negative. Rest are data not available. So this is the financial analysis and status of the company, and this company has been categorized as a defaulting company. Now let us go on IPO review. This is the IPO review. So strong pharma business, but is the IPO valuation too expensive? SYMBIOTEC PHARMALAB is entering the IPO market with 1,757 crore issue at a price band of 938 and 988 per share. The IPO is scheduled to open on 24th August 2026 and closes on 27th 2026. So first is business overview. Established pharmaceutical and biotechnology manufacturer. Focus area APIs, steroidal hormones and nutritional ingredients, specialty pharmaceutical products, backward integrated manufacturing capabilities, strong presence in regulated international market, manufacturing capacity include approximately 585 metric ton chemical synthesis capacity, services customers across multiple global markets, benefits from China plus one strategy, global pharmaceutical outsourcing, rising chronic diseases, and growth in nutraceuticals and specialized API capabilities provide a potential competitive advantage. Business verdict. Strong business verdict, attractive industry tailwinds, IPO structure, 1,757 crores IPO, fresh issue is 150 crores, OFI is 1,607. Major portion of the issue is therefore OFS. Fresh proceeds including 112 crore for debt repayment. So key investor question. If most of the IPO is in a OFS, how much value is actually being created for the company? Yes, that is 112. See, this is for debt repayment. So let us take interest rate is 10%. So 112 comes to 11.2 crores is the interest the company can save in a year. Then that less the income tax, that is 30%. So how it comes to around 3.3. So what is the net what is the net gain what the company can get is around 8.5 crore from investors investment of 1,757 crores. If investors about 1,757 crores in this IPO, the company earnings will be around 8 crores. Should we invest so much amount for small earnings of 8 crores? And what is the company can get and what is that the investors can share? So here, the total meaning of IPO has been changed. In general, what is mean by IPO? IPO company raises funding through IPO to use it for business purpose, either for expansion or for regular working capital. Expansion automatically increases the business capacity and the company will have good turnovers. And working capital also facilitates for good increase in revenue, additional revenue, and company will have a good profits. Here, the only 112.5 crores are being used for the company or proposed for the company, and net return what the company can expect is 8 crores. So, do you invest for 8 crores? The question is up to you. It is up to you, but it is my duty to bring to you the facts. So, key investor question is, as we have discussed, if most of the IPO is around OFS, how much value is actually being created for the company? 8 crores. So investors who have invested some crores of invest 1,757 crores. What they can get? 8 crores. 8 crores, what is the company will retain and what is the company can share? When the company share value should increase, market value should increase. So it's up to you. See, this is by being a research analyst, I want to bring to you the impact, the effect of this IPO. So the high OFS component means existing shareholders are monetizing a substantial portion of their holdings while the company receives only the fresh issue proceeds. Here, what it appears, the company management is having some second thoughts. So that is the reason why they are raising 1,757 crores. Out of that, 1,657, so 1,607 YFS. So this is what. So coming to valuation, the big concern is 980 rupees upward price bands. Number one, The company is a defaulting company. Huh? So on what basis they have fixed the price about 988? Of course, we don't have this. As I have been telling your people, no, we don't have the system of categorizing the company into healthy, unhealthy, defaulting net worth error company. That is the reason why SEBI has been allowing all the companies to access public issues. So company management, as they want some good amount by selling their existing shares, they have fixed 988. But are you there to invest? Are you there to subscribe at 988 rupees? So maybe. And one thing, all the confidence they have, they are very much aware that investors do not follow the fundamentals of the company. They go by some rumors. They go by some speculation. They don't go by fact. What is the fact? The financial status of the company is the fact. So that is the reason they have given why they have planned to raise 1,607 crores. What is that? YFS. So mistake is not there. Mistake is investors. How dare they are to raise 1,607 crores from YFS? You are giving the chance to them. Even under the growth assumptions provided, projected P is 39.7, projected PB is 4.5. In general, what should be the PE? It should be 25 and less than 25. Suppose if it is less than 25 and when the price is listed, when the share is listed in the stock exchange, you will have some margin. You can get some listing gains. Here it is not the case. When you should get when the PE of 51.72 get when the company get a new EPS that much amount, then only the PB will be 51.7. But it's not the case. Only 8 crores the amount what the company is going to receive. What is the company can do to increase the EPS with the 8 crores? So please listen. Valuation weightage. Good business, expensive valuation. At more than 50 earnings, investors are paying a significant premium for future growth. The problem is that even after incorporating growth assumptions, the valuation remains elevated. Investor question, are you willing to pay 50 PE ratio earnings for this growth? My view, not a deep value IPO. Financial health, watch carefully. The valuation becomes more concerning when financial risks are considered. Financial default concerns, working capital deployment concerns, they were diverted, no? See, diversion of funds, I told you, no, it is a fraud. And they are defaulters. Company is a defaulting company. Receivables outstanding for more than 2 months, loans and guarantees extended to subsidiaries, loss-making subsidiaries, negative net worths reported by certain subsidiaries. What will happen? These promoters, what they do, the amount whatever they raise 1,607 crores, they will use it for investment in subsidiary company so that the company net worth will come up in a positive. Plus existing debt obligations, potential recovery write-off of risk from subsidiaries. Okay, investor takeaway, a premium valuation required premium financial quality. When balance sheet and cash flow risks are present, 50 plus PE valuation leaves a limited margin of safety. Market sentiment, the IPO has attracted significant attention because of SYMBIOTEC's position in the specialty API pharmaceutical segment. Grey market indications should also be treated cautiously. Current source, every investors are after GMP. Grey market price, grey market bankruptcy. I should tell you, 50% of the companies are being listed at below the price. I do not know how you people are expecting GMP, and it is up to you. So current sources do not provide a reliable established GMP signal, and GMP is an unofficial, unregulated indicator rather than a fundamental valuation measure. What to watch during IPO? QIP subscription, most important. NIA subscription indicates leverage, high risk appetite. Retail subscription indicates public enthusiasm. GMP sentiment indicator, not valuation proof. Investor scorecard, sorry. Business is strong, industry attractive, global opportunity positive, regulatory capability positive, IPO structure, YFS heavy, Valuation expensive. PE 51.72, PB 5.34, cash flow financial risk concern, market sentiment awaiting subscription, margin of safety no low. Don't, you should not even use the word low. I have put low, but it's not even low. It is a negative, I should tell. Final investor review. SYMBIOTEC PHARMALAB IPO. Business quality good. Industry outlook positive. Valuation expensive. Financial risk high. Margin of safety low. Final verdict. May avoid. Wait for better valuation. SYMBIOTEC has a strong pharmaceutical business and attractive long-term industry prospects, but 51.7 times PE and 5.3 times PB, the IPO appears expensive. The OFS heavy structure and financial cash flow concern further reduce the margin of safety. Closing line for investors. Good business does not always mean good investment. At the SYMBIOTEC PHARMALAB, the biggest question is not the business. It is the price you are paying for it and the return what you should expect. So as always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. If you found this analysis is useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much.